pipeline MLP industry. This is a very interesting industry in the sense that it's not like normal company. It is a partnership, and every one of you who buys the unit, you become a unit holder, not a shareholder. And you probably understand when you create a partnership, the partnership itself doesn't pay taxes. Taxes are supposed to be paid by the unit holders. So that's why we see when the company receive the profit, they distribute practically all the profit towards their unit holders, and then you pay all the taxes. And I received a couple tax already, tax invoices. They deduct the tax, which is roughly 30%, because foreign holder tax, we have to pay it in the United States, and it's close to 30%, I presume, roughly something like that. I presume you already know that. And also, the structure of expenses structured in a way that they have two types of partners, and general partners, what they do, they're responsible for managing this company, and they get the cash for like the profit from managing this company. So there are no kind of expenses within this business. So that's why when we look at their profitability, whatever cash they generate, whatever sales they have, it's practically all the cash flow and all the profit. And the reason for that instead of taking like salaries, people taking a share of the profit of the companies. And usually for managing these companies, they can take from 2% up to whatever percentage they agree, depends on the structure of the partnership and the size of it, and etc., etc. So something like that. The good thing about this type of industry that it's related mostly to oil and gas transporting, processing, and distribution like activities. Majority of them, they have pipelines in the Midwest area, and kind of whenever they create this business, plus own tax on top. I presume when you're going to pay tax, you have to show that you already paid this tax. And I presume that our tax agents, they will deduct it already. So they will kind of take it into account that you already paid these taxes. But the best way, if you go to the tax engine, they talk to you. That's my assumptions, because that's how the tax law works in majority of other countries, and I presume it's exactly the same here. So you just have to contact. I haven't complied with I haven't submitted my tax this year yet, so we'll see what my tax agent will tell me about this. Okay, in any way, these companies, they don't pay federal tax, and they have kind of pass-through of flow-through tax structure. And actually, I presume if you understand that, imagine the situation that you bought that stock, right? The company receives certain cash, and that cash distributed straight away. So assuming you bought this company at $50 level, and then the unit price goes down, or the share price goes down, so you have this capital loss of $10, and then you have a profit of would say $3 or $4 from dividends, from distribution, which you have to pay straight away as a tax. And it is not the ideal situation for a lot of funds, because they cannot like take advantage of the stock which is sliding down, because practically the whole profit is not staying within the company, it's paid back to the unit holders. And when I looked at the amount of institutional investors in this company, I was quite surprised, because I expected there would be much more institutional investors, and here it's only about 47% or something like that, 40 plus percentage from this. So that's why you have to take into account this structure before you buy it, because if you don't want to complicate yourself with the taxes, you just better maybe to stay away from this type of industry. If you're fine with that, So you can profit from the potential growth of that. Now, if you go to value line, you will see that value line ranked this industry 10 only. It means that this particular industry has the highest, like one of the highest potential for growth within the next 12 months. Okay, price growth. Okay, in this particular case. So what I've done, I went to the screening and I put only two parameters. One parameter was pipeline industry, and there were 41 companies there. And then I put P ratio from 3 to 10, so quite low P ratio, and only 8 companies left. When I after that I downloaded the spreadsheet with that and inserted it in Finviz, and that's what I come up with. I analyzed other companies. I looked at them. At least I looked at 3 other companies which have forward PE smaller than the current PE, because the last 1, 2, 3 companies, 4 companies, their forward PE is higher. It means that they're going to have less earnings than like during last 12 months, where the rest of 1 and probably 2 and 3 companies, they have the similar or smaller forward PE ratio. It means that they're going to have higher earnings next year. And when I looked at those companies, they're quite small. So EQM, one of the biggest in this particular area with the undervalued companies. Whereas if we go into look at value line, we will see that definitely EQM is not the biggest company in this industry. So there are quite a few companies which are much, much bigger. And if we look at technical analysis, we will see that EQM is quite low, and other companies are quite low as well. So the whole industry is downgraded. And the reason for that, if we look at the last year, what happened during the last year after our previous masterclass regarding this industry, that there were a lot of restructural activities within this industry. Majority, there were some tax changes in United States, and some companies, they had to restructure their legal things. They have to buy their parents' company, they have to buy their partners, and etc., etc. So there were a lot of mergers and acquisitions were happening during that time, and that affected emotions of the people. People weren't happy about all these mergers, because you probably already know that mergers never tell us exactly what is going to happen, how it has to go, and all those uncertainties created this slide down. And a lot of companies in this specific industry, despite their high dividends, they're quite low priced and with a very, very low P ratio. Okay, this is about the industry in general.